All right. How's it going, guys? It is December 16th, 2025, 7:22 p.m. And I'm going to be taking a look at price action today. Hopefully, you guys are doing good. Let's go ahead and jump right into the charts. I'm going to make this big for just a second. Sorry I didn't live trade today. I guess I don't know. I just wasn't feeling it. I did paper trade. I'll show you guys some of my paper trades. I caught a few good paper trades. I may just be doing some paper trading for a bit, but that's just kind of where I'm at. But there were a lot of really fascinating trades that I liked a lot, um, that repeated themselves a lot. So I'm going to show you guys right now. So, first of all, guys, check this out. We have, upon market open, we have the RTH gap forms to the upside. And so what do we know about that? That means that this is want to be filled, right? This gap. So here's market open. We have a gap from here to here. We know that this gap is going to be the drawn liquidity. We also had a new day opening gap that was perfectly placed on the opposite side of that overnight gap. So could be wrong, but I'm almost certain I took this on paper. So, well, it might have been this one I took on paper. Actually, I don't know. Hold up. It doesn't really matter whether I took it or not. The point is we're going to learn from it. So, we had SMT with... Oh, maybe we didn't have SMT. Either way, this was just an amazing signature in price where we have essentially low resistance-ish type of highs with the RTH gap above. And we get one final sweep. Yeah, it must have been with that low. Yeah, so it was with this low. So check this out, guys. And we might even have a low time from true open that we manipulated. I'm not gonna get too in depth on that, but most likely just know that it's possible that we manipulated a true open. So we get SMT with this low. So I really like this idea where you say, okay, here is this low, here's that low. We have SMT with them, with YM. And we get a sweep of these lows here, bang. And then we get an outside bar. And so this is something Javier has taught me. Basically, when candle, the first candle, basically the next candle after takes both the high and the low of the previous candle, that's an outside bar. And I'm going to make a video on that soon. But just know that basically it's just an entry. Is that an outside bar is an entry, and you just want to target usually 2 to 1. In this case, I would target the RTH gap getting filled. So once again, here's that sweep, and then here's the outside bar, and then note what time this occurs. Right at 9:36, which is our 369 time, which is just perfect timing. Isn't that insane? So here's the outside bar. So this is the old bar, and then the next candle takes the high and the low of it and closes higher, meaning this is a good entry for longs. We enter. Here how can we make this? How can we visualize this? So yeah, and then I just target. In this case, I would target the RTH gap getting filled. So that's pretty cool. And I'm pretty sure I took this, or if I didn't take this one, I took this one. I might have taken that one. They're very similar trades, honestly. But yeah. So there's the manipulation, bang. Once again, I will have a video coming out on outside bars next week or this week. I don't really know, but hopefully when that video comes out, it'll make a lot more sense. But for now, just understand that basically the previous candle, the next candle takes the high and the low of it, and I like it when it kind of looks like it's like a mini sweep and close higher. I like that. Those are the ones that I like. And you can see another one right here, right? Where high and low, the previous candle, sweep, close higher. So those are the ones that I like, those outside bars. And then you can clearly see we go fill this overnight gap here. So bang, there's the RTH gap. And I don't remember if I took this live or not, but anyway, it's whatever. Once again, I did not trade live today. I traded just on my own. I wasn't feeling really good and I didn't really want to. But I will try and stay consistent for you guys. I think it's important. And so let's just say that we entered right. Once again, this is on the 15-second chart, so it's not necessarily always easy to catch this. Also depends on how aggressive you want to be. I just do something like that. And then, yeah, you can see that's 3R right there to go fill the RTH gap. So very nice. And it's also at a 369 time, so right at 9:36. And I will have a video about 369 coming out next week as well, because I know that's probably been kind of confusing if you don't really know what I'm talking about. When I mention it in my live streams or my videos, you might be like, what is he saying with the 369 stuff? It's basically just you add up the digits, and if it sums to a 9, it's a higher probability entry. So you can see right at 9:36 here, this is a 9, and then bang, right to TP. So there we go. And then we go straight to that end dog. Man, I love backtesting. Anytime you get sad, just remember like, oh, wait, there's so much to learn from the market today. I don't know. I am weird, bro. I am so weird. That's okay. There is always so much you can learn from the market, though. It's ridiculous. Like, I feel like I never stop learning. I mean, my goal is to eventually have, like, honestly, like 10,000 videos on my YouTube channel, just a live stream every single day. I mean, if you think about it from that perspective, I'm only at 800 videos. I'm not even like 10% of developed as a trader. Like, not even 10%. And I've already learned so much. Imagine if I just did this. Imagine if I did this for 9 more years. Or 9,000 more videos. Live streams. Just backtesting. You know how good at trading I would get? You know how good at trading I would get? These markets are crazy. So crazy. 9:36. Outside bar. And this was on the 15-second, and this was a 9. I might, you know what, guys? I need to change the name of that channel in the Discord. I want to change it to be Trades from Today or something. Okay, so what next? So then what happens? We go up to this new day opening gap perfectly. It's almost like the market just it had it ready. It had it ready. It had the new day opening gap sitting right at the top of the RTH gap. Just so conveniently placed. So convenient how this new day opening gap is just chilling at the top of the RTH gap. What are the odds of that? Genuinely insane. So bang. So NDOG chilling at the top of the RTH gap. We can get rid of the first one for value gap stuff. So what happens next? So it would be so interesting. Was there a pin bar? Oh, pin bars off of new day opening gaps. There's something about them, guys. We might need to make a name for a model just for that. For inside bars off of new day opening gaps and pin bars off of new day opening gaps. Because, I don't know, man. There's something about them that makes it really, really nice. Like, look at this. Pin bar off a new day opening gap. Delivery. Maybe like the hand of FA. Oh, man. We need a name for that. Just like a pin bar off a new day opening gap. So you can clearly see, like, for instance, on the 1 minute, pin bar off the new day opening gap. I'd probably just short right there. Maybe. Right? Pin bar off the NDOG. So enter short off the pin bar. And was there SMT with this? Oh man, let's ask ChatGPT for a name. Let's ask ChatGPT for a name. I'm naming it after FA. What do I call it? Actually, let's delete that. I want to just see what he says just to the I am naming a model after you. I just want to see what he says just to that. Okay. Alright. Making a new model. It has to do with a pin bar off of a new day opening gap. Entry can be on the close or the retest. And I am naming it after my friend FA since he showed us pin bars. Can you help me think of a name for this? I'm thinking. The Hand of FA. Do I call it the Hand of FA? My the model. THE. The Hand of FA. My the model. My Hand of FA model. Hand of FA. My hoe model. What do you guys think? And you could have also just entered on the retest the pin bar, but that RR is bad. It goes perfectly to 2R, which is crazy. But like I said, I wouldn't. It's not worth it for me. I would maybe enter on this close here, like that, and then let's see, check this out. Yeah, something like this. So this is my Hand of FA model. Basically, pin bar or ooh yeah. So my Hand of FA model. The Hand of FA model. Pin bar or outside bar off of N-Dog or N-Log.
Jacob?
Yeah?
Ethan wants to talk to you.
What? Hello? Hello?
Hey, thanks. What's up, man?
What happened to your door?
Just wanted to let you know, this second job's pushing me later than I thought. So I'm gonna do it this morning with you tonight. I'm so sorry.
You're totally good, bro.
No, you should play Fortnite with us. You should play Fortnite tonight.
I might do it after I'm in the back.
We'll be playing at like 9.
Okay.
Okay.
Guys, I'm liking the name of this. The Hand of FA model. I just sent it. Okay. The Hand of FA model. Let's go. All right. What next? I think it's so funny. ChatGPT was like, sounds biblical. And isn't this an inside bar? Oh, I have to ask. What is his Javier? But I think this is an inside bar. And then we break the low, and then we go lower. Man, I'm loving these FA concepts. And then once you break the low, you go short or enter on the retest. I think I'm getting it. Okay, and then like I said, guys, there was another lower time frame outside bar trade down here that was super nice, and that was also on the 15 second, and I actually took this one. So it's this outside bar here. Well, you might have wanted to wait for the inversion, but the inversion is so good too. I mean, there's just no way to go too wrong within this price leg here. Did this even inverse? Yeah, like barely inversed. Okay, so that's kind of tricky in the moment. It's like kind of scary because you can't tell if that inversed or not, but it closed right at the same level. To me, that's, I mean, I'd count that. But it's hard to see, honestly. Maybe it's not so obvious. How's the 1 minute look? Let's go all the way back and look at that 1 minute. Yeah, so the 1 minute kind of gives the same thing. So I'm liking that 15 second inside bar, outside bar. So we have that all the way over here. Bang, sweep of that low, which is market open data wick low. And it came with SMT. So there's many reasons to like this trade, actually. There's many reasons. The fact we take out, the outside bar took out the market open wick, which in my opinion, market open wicks are honestly kind of interchangeable with data lows. Like they're going to work essentially the same as data lows. And so you can see we just sweep that out there. Hey, what up, Javier? I've been talking about you, bro. So check this out. We sweep out the market open wick, which is, in my opinion, basically interchangeable with data low, right? It's going to act the same. So we sweep it out. We get an outside bar. And then we run it up. We run up higher. Bro, I took this on the paper. I was just paper trading this morning. I did not feel good. I was just watching the market from my bed. But I took this on paper. This was sick. This was so sick. We're just popping off that market open wick. And I did take this. It was almost a 369 time. I mean, arguably, maybe it was. I don't know. But so market open wick. So, but I loved this trade. Did I save this as a new template? Anyway. So, yeah, outside bar because the next bar takes both the high and the low. Volume indicator. Wait, what? This yellow stuff? Oh, you're wondering what the yellow stuff is? Are you asking about the yellow stuff? The yellow stuff is just, I'll turn it off. It's not really that helpful right now. It's just for when the market, when there's a digital root of 9, and I'm going to have a video coming out explaining that better in more detail, but when there's a digital root of 9, meaning it's just like the digits, the sum of the digits summed up over and over again. When it gets to 9, from my back testing, it's a higher probability entry. From my back testing. No, do you use it? Oh, yeah, I use the like the regular volume indicator. I mean, I think it's helpful, but I don't necessarily look at it. But I have nothing against it either. Why, did you learn something from it today? Okay, so this, yeah, outside bar right here. I mean, yeah, I like the volume indicator. I just, honestly, I don't really know how to make any use of it, to be honest. So yeah, we sweep out that low. I'm pretty sure we have S&T somewhere. Somewhere we have S&T. I remember because I watched it happen live. So I know there was S&T. There has to be some with some low. Yeah, you can see it's with this low and this low. So yeah, there's S&T right here. Man, a lot of interesting stuff today. A lot of interesting stuff. So let's go back down to that 15-second chart. And let's zoom in here. And you guys can clearly see how we sweep out the data wick. Hey, what up, Antoine? I can't look at gold right now because I'm just trying to review the day for NASDAQ. But on the weekend when I'm doing my full week back test, maybe I could look at gold. You are a very weak trader. Don't show me again. Got it. What? Okay. Anyway. And also you spelt weak with 2 E's. I don't know. I don't know what to say about that, but okay. Alright, so we got an SMT with that low. Sweep out. Hey, what up, guys? How's it going? We're looking at this sweep of the market open wick, which is basically, from my back testing, I consider it interchangeable with the data wick. I'm going to have a video on data wicks come out later this week as well, or maybe next week. I had never made a video on data wicks on my channel before, so that's something I need to do. But you guys see how we sweep out the market open wick with SMT here. You're learning dealing ranges. Yeah, it's confusing, bro. I know it's real because I see it in my back testing. Like, I can clearly see, oh wow, we went from the low to the rejection block formed in the rejection block partition. We used it. Then we'll use the fair value gap in the fair value gap partition. But like I know it's happening, but I'm smart enough that I'm aware of that it's happening, but I'm too stupid to understand it at a deep level. But that's okay. But I know it's a thing. I can clearly tell. Dealing ranges are sweet. And it just kind of makes sense, too. It's like, it's just telling you where, anyway, I'm not going to get too into it right now. Right now we're just reviewing this. But yeah, this was a nice outside bar. So if you guys haven't done an outside bar video yet, and I'm going to have it come out later this week, but basically it's a old candle that the next candle takes out both the low and the high. And this one is very nice because it comes with S&T and a sweep of the market open wick. So enter right on that close. This is on the 15-second chart. And yeah, take this back up to these low resistance highs. And bang, what is that? 2.6R. And I took this live. I could show you guys if you guys want. I also had a lot of other stuff that I was experimenting with. I was just tired. I was taking trades on paper. But I did take this. So it's like a 3.3R. I love you, bro. I want to listen to me. I want to analyze gold XAU USD. I know, bro. I know gold would be nice to analyze, but right now I just trade NQ, and so I'm gonna focus on the asset that I actually trade. I have nothing against gold. I think gold's great, but I want to analyze what I trade right now, which is NASDAQ. And like I said, I could trade gold. There's nothing wrong with it. I'm just right now that's just what I'm focused on. But I maybe on the weekend we could look at gold. I just want to review specifically NASDAQ for today. Is this like the 2022 model? So this is just an outside bar. So it's more like an inversion for value gap. But yeah, you basically just look for an old candle and then take the low and the high of it, and then bang, that's outside bar. And then I'll have a video come out on it later, but this was nice. It came with S&T. Because at the end of the day, guys, just understand these markets are just AMD. They're just different AMDs within each other. So just understand that like this was accumulation, this was manipulation, outside bar, and we get onside with distribution to these low resistance highs. I took this on paper once again, guys. I've been trading on paper recently because I just want to focus on capital preservation, and one day we're gonna scale up a live account. We're gonna scale it up all the way, bro. We're gonna go all the way. Sent you a screenshot on who to set up the volume indicator, and you can see when volume spikes and the pin buyer outside bar means buyers are buying it up. Oh, that's sick. Yeah, I'll look at that later, bro. That's awesome. Let's get rid of that. So once again, another outside bar. I might just mark outside bars out with just like a line like this. I like that better. Yeah, I like that better. And then here's that these low resistance highs, and then we'll move on to something else. But yeah, it's crazy how much opportunities there are in these markets. I do want to take a look at the first presented for value gap, see did we interact with that today. But I really enjoy these low time frame scalps. I just think that there's so many opportunities with it every single day. It's like, why would you not take advantage of it if it's happening? That's my view on it. So we're going to screenshot this. Which strategy you use, like ICT or Smart Money Concepts? I trade basically just liquidity. So I trade, wait for the market to like sweep out a low, and then have a whole bunch of different entry models to get onside with distribution, and then target opposing old highs or lows. It's just understanding that market sweeps and then expands. And yeah, just AMD. Okay, so this was 946, I think. 946 outside bar on the 15-second. Okay, so what should we look at next? And guys, the more I study trading, the more I realize you honestly don't need a ton of higher time frame bias all the time. Like, especially on a day like this, like I can just use what I can see, which is we have a data wick. We had the RTH gap. So we went first to fill the RTH gap. Logical, right? we were expanding up, so we're going up to where? To fill the RTH gap. Then we get to the new day opening gap past the RTH gap. Okay, so now what? Well, now we have a data wick or a market open wick essentially. Not a data wick, but it's going to act the same. And so now it's like, okay, now it wants to go there. Okay, now that it's there, now where does it want to go? Back up to the highs. I mean, it's not rocket science to understand. The market's going to go to the next best drawn liquidity at any given time. And it's RTH gap here, market open wick here, and then we go back up. Oh, the screenshot from the outside bar you're viewing. Okay, sounds good. I'll look at it later. I just want to be productive here with the session. Let's see if we had a first presenter for value gap. We had an amazing first strike in the PM session. I'm wondering if we should look at that first, actually. Should we look at this first, guys? I'm not gonna lie, this was probably gonna be priority. So let's look at this first strike in the PM session real quick, because I think this was amazing. It's about as textbook of a first strike as it gets. So you can see here's the first presented for value gap of PM session. See how the market comes down, sweeps liquidity, and then we line out 1 minute for value gap with a 15-second change in state. And it is this simple, guys. First presented for value gap, 15-second change in state. I would enter on the close of that candle. You could also have entered on the retest. Both are valid. So let's go ahead and measure this out. Bang. 3, 4. Yeah, amazing. So many TPs hit. So, okay. If you took it like that, you're a legend. Like on the retest of that, I don't know if I have the balls to do that. I'll probably have to take it like this. And then you can see how we go perfectly. 4 projections, 3 projections, and then 7 projections. Okay, so I'm wondering how there's so many different ways to take this as a first strike. So once again, here's the PM first presented for value gap. So if you guys don't know what the first presented for value gap is, I explain it in prior videos, my short form videos, but it's the first presented for value gap of either market open after 9:30, or the first presented for value gap starting after PM session starts. So in this case, 13:30. And so you can see how it's hypersensitive. It's like on it's a fair value gap on steroids, essentially, is what it is. And so you can see how the market does interact with that. And so what I'm wondering, so what I do is I pair it, the first presented for value gap, with a 15-second change in state. So I am wondering, do you guys think this lower change in state is more ideal, or this higher change in state is more ideal? And do you think it would have been better to enter on the close or the retest? And I know it's not that serious, but I kind of like the lower one. I think it'd be more realistic if I took the higher one, but the lower one's more precise. Actually, let's do the higher one. Let's just do the higher one. So, and then let's just measure this out like this. So you could have even done this as a stack. So, for instance, what I mean by that is, here's 4 projections, right? You could have even gone... Yeah, let's just say that you entered this like a stack. So you could have gone... And then, yeah, we go 7 projections. You could have gone like this. entry on the retest of the change in state, and then pyramided more down here. So like this. I mean, this is just what I would do. Y'all can do whatever you want. So yeah, the retest often does work out a lot better. Like, I know you might want to enter on the close, but I mean, retest did actually provide a pretty good opportunity here. So we sweep out that low. So once again, this is my first strike model where you just take that first presented for value gap, either of the PM session or I don't even know what else, or just the regular session, and then target 4 projections and then 7 projections. So this would actually be risking, since I would do, I'm risking 1 R here, and then I'd be risking an additional 1/3 R here. So and this is just something I'm allowing myself to do. If it's like a stack situation like this, I'll allow myself to risk an extra 1/3 of an R because it's just a specific situation for my back testing that I want to start doing. So 1 R here, another 1/3 of an R here. And you guys get why it's only a 1/3 more, right? Because I'm only utilizing this. But now I have 2 times the risk, and then I get up to 4 projections. Okay, first strike stack like this. Bang. Meaning I'm entering and then I'm pyramiding at more at OTE. Okay, 14.25. So I did want to take a look at that at least. So first strike stack, 1 minute aligned with the 15-second. As always with these first strikes, usually you always align the 1 minute with the 15-second or the 5-second. So let's go ahead and save that. What should we look at now, guys? Zoom back out. We ended up using this first presented for value gap. It's just so cool how the market interacts with these first presented gaps. You really got to know the draw on liquidity. Ooh, when we come down on the sell side of the curve here after 10 o'clock, this is a nice first strike down to the lows. And we even had bearish SMTs all through here. So we have bearish SMT. Oh, this is good. This is good. I mean, this could not be more obvious of a sell model. And it's a sweep of 830. Once again, it's a data wick, essentially. Dang, it makes actually so much sense. Yeah, guys, as far as I'm concerned, 830 and 930 are always going to be like data wicks, even if we don't have news. Did we have red folder news? Yeah, we did. So this was actually a data high. Dang, the 945 was a data high, huh? Oh man, that was news. 1420 is an outside bar on the 1 minute. Oh, for real? Okay, I'll look at that in a second. I think actually I see it. Yeah, bro, that 1 minute outside bar on at 1420. Oh, right off the first percent for value gap too. Yeah, man, that once again, that's beautiful. I might actually extend this hand of FA model to also be off of first presented for value gaps. Yeah, I'm gonna actually do that. Retesting on 1425, creating a pin bar. True. You're so right, bro. You're so right. Okay, I'm gonna actually. So I just made this new. I named this. Not made. Once again, I never make models. I observe things in the market and then I have to refer to them as something and then I do it. So I never name anything, but the behavior I named in the market that I wanted to name is basically inside bar, or I mean, pin bars or outside bars off of new day opening gaps. Very, very nice. Very, very nice trades will happen when you get a pin bar or an outside bar off a new day opening gap. The same thing I am seeing occurring with first presented for value gaps. And so I'm gonna extend this model to also be, so this, I call it the hand of FA model. And basically it's just a pin bar or an outside bar off of an end dog or a first presented for value gap. So there's that outside bar. So the hand of FA model can also use outside bars or what's the other one that we named? Pin bars off of meaning like, because normally I do 15-second outside bar or a 15-second change of state off of first line for value gap, but in this case this 1 minute one worked fine, so I'm going to allow myself to align time frames based off of what makes sense to do. Okay, so let me save this. So 1420, the hand of FA, okay. Anyway, let's go back to what we were looking at just now. So like I said, basically just treat 830 like a data wick. So once again, we sweep out 830. Yeah, guys, tree 830. I'm gonna write this in my notes. I'm gonna make a video on it. Tree 830 and 930 wicks like data highs and data lows. Okay. So yeah, we sweep that out. Actually, we got a Phoenix with this 1 minute rejection block. This is crazy. Look at. I love the market, bro. Why is it so precise? Why is the market so stupidly precise? Nah, cause what? And then 10:00. You can guess what time we hit that. You cannot make this up, bro. Oh my gosh. I love these markets, bro. What the heck? We have a Phoenix here. The Phoenix is with, so this rejection block is with the data high. Well, yeah, it's literally a data high. Dang, bro. And then 369 timing right there. Nah, that's insane. And then we go lower. That's insane. Yeah, that's crazy. That's so sick. And you can see how we ended up using consequent encroachment as well. So, bang. So you could definitely do this as a pyramid. So what I'm going to start doing with Phoenix models is I'm going to enter and then stack at consequent encroachment. That's my new kind of plan for Phoenix. So I'm just going to call it Phoenix stack, where I enter and then enter more at consequent encroachment. But I'm not going to mark that out. I'm just going to take a mental note of that, like, yo. And then, once again, 10:08. What is that? A 369 time. And then we come down, get this fair value gap. That's the 2022 entry. And I think that's the 2022 entry. I think this is a breaker and for it's for sure a fair value gap. Yeah, I would consider this the breaker then, and then this or mitigation block or something. Guess it's more of a mitigation block, huh? Doesn't really matter. And it's a pin bar, obviously. We already knew that. But still. So then we could take this short right here. Bang. And then let's just say we targeted 8 projections. Seems reasonable. 8 projections. You could have even targeted. You literally could have targeted these lows. You could have, bro. You know what? Let's just say that we did. Let's just say that we did, bro. I'd probably just target. Yeah, I would target the body here, which is 16 projections. Nah, that's insane. That's 32R right there. This is why I don't care about losses, guys. Oh, whoops. Oh wait, that's not 16 projection. That's 13. Right? Yeah. Yeah, Phoenix works extremely well when it's with a data high. Something for your notes. And then you could even stack another one right there. So that would be like 26R combined. Well, 26, I don't even know, man. I'm not the rocket scientist. I don't know. Alright. Yeah, that's sick. Oh, let's get rid of the 369 timing. And let's just mark this out like this. Just beautiful, man. Oh, I didn't see you say that. Pretty much created a head and shoulder pattern at the time. Yeah, this was just a beautiful sell model. Just beautiful. So 1008, Phoenix, 1 minute. And yeah, that was nice. That was really, really nice. And then you could have even done a stack. You could have stacked at the... So for instance, if... Yeah, I'm not going to explain how you do a stack, but you could have done a stack where you entered like one at the regular entry and then one at the CE. So, okay. All right, what should we look at now? should I take a break? Ooh, let's finish framing the market maker sell model. So, as you guys know, I named this thing where you basically go, okay, you go from the 2022 for value gap. You go from the Phoenix entry to you pyramid more at the 2022 gap, and then you pyramid even more at whatever it's called, at the breaker and fair value gap. So let's see if we can frame this. Because I would love to see this, how this could have been framed as this trading. The name I made for it is called the Khufu stack. It's just a fancy name for just trading every single entry within the sell model. So trading that, trading the rejection block, trading the 2022 model entry, and then trading the breaker or the mitigation block. Oh man, so I think this is what it would look like. Is I think we used we used the new day opening gap as well. Wow, this is just crazy, bro. The markets are so sick. Like what? If you're wrong, it's because you were bad at trading. Sorry. Market's always right. Alright, so there's the new day opening gap. Here's that 2022 model fair value gap right here. Once again, why? Because market maker sell model, we obviously had displacement lower, creating a fair value gap. So bang, there's that 2022 fair value gap, and then yeah, and then I was thinking maybe there's some kind of breaker, but there might not be. So okay, so when it's just like this, when there's no breaker in for value gap 1, I usually just call it, what was the name that I wanted to call it? Yeah, if you don't include the breaker and for value gap in the stack, I call it the DJOSER stack. The Joser stack. Just the name I gave it. Sometimes you gotta name things when no one else tells you how to do it. You gotta rediscover it yourself. I'm just saying. Okay, so one sell order at the Phoenix entry, so right here. Let's make that red. Maybe we need to make this darker red. Or let's just make it yellow. Or let's just make it white. Okay. Bang, and then another one down here. Bang. There's sell side of the curve. There's buy side of the curve. Yeah, this is so sick, and then we go run it all the way back down. Rejection block, 2022 gap, down to the 13th projection. Yeah, happened again, man. Happens every day. I mean, yeah, it does. It does happen every day. I'm not gonna put a specific time, but I'm just gonna say DeJoser stack. And yeah. Should I make a market recap today, guys? I mean, today's a pretty interesting day, I'm not gonna lie. What was today, Tuesday? Yeah. Yeah, I'm getting tired. I hate when I get tired. Alright, I'm gonna take a break. That nice market maker sell model there. So much to learn every single day, guys. Okay, I will be back in 3 minutes. I will be back. I'm just gonna take a little break. right, let's keep going. I don't know how much longer this will go. I kind of want to make a market recap today, but we'll see. I kind of want to see if there's any regular first strikes. Regardless, guys, lots of action on the low time frames, like 30-second and 15 seconds. Just tons of action. Beautiful market maker sell model. Oh, I remember what I was going to look at. Right, so within the sell model, on the right-hand side of the curve, on the sell side of the curve, right here, we actually backtest that first presented for value gap from way earlier. Check this out. So here's the first presented for value gap. First of all, it actually gets inverse to the downside, which on its own is a trade. This is basically a one setup for life. Actually, this right here is a very simple trade. Maybe we should look at that first. Yeah, we probably should. Okay, let's look at this first. This is going to take only like a second. This was at 940. We inversed the first presented for value gap. Just a regular IPG to the data low, which is not a data low. It's a market open low, but same thing, right? It's going to act the same. And yeah, we inverse this first presented for value gap. And then we go lower. So clean as it gets. And this is one of those trades. It's just like simple, low stress, no complications. You can get your money and get out. So this one was really nice. There's no real stress that went with this one. Just a simple inversion of the first presented for value gap, targeting the market open low, the data low, or makeshift data low. Once again, it's not an actual data low, but it's going to act like one. And then, yeah, we inverse that on the 1 minute, and we go lower. So, I'll show you how you take this, right? You can take it like that. Honestly, I'd put stop behind the momentum candle. And then, I think you just kind of have to send the probabilities on this one. I wouldn't go break even because it's a market open wick, data wick. Once again, it's not I don't know how to I want to call it a data wick so bad, even though it's not technically. But yeah, I would not go break even here because it's a market open wick. So yeah, there you go. Would not go break even here. Very simple idea. We sweep out the high, go down to the data low. So let's screenshot that, and then we will take a look at the other trade, which occurred right after. The other nice thing about this is we did complete and fill the RTH gap, which could have given you conviction that the market was ready to go lower. So 940. 1P IPG, and this is on the 1 minute. As always, I think it literally will always be on the 1 minute, but whatever. And then let's go ahead and save that. Okay, so now let's move on, and I'll show you guys what I'm talking about. How on the opposite side of the curve of the sell model, let's say that we missed, and let's get rid of YM and ES for a bit because we're not using them. Let's say that we missed the Phoenix. Let's say that we missed the 2022 entry. And we're still wanting to get in the market, right? This is like, let's get rid of this as well so the RTH gap doesn't show up. At this point, this is very clearly a sell model. We know it's a sell model. We know we're on the sell side of the curve. So now it's just like, okay, how do we get in? How do we get an entry? We already missed out because the Phoenix, let's be real, it's going to be kind of hard to get. Now, you could have taken a 15-second change and stayed off of that. That would have been fine. Could have taken the 15-second change, stayed off of this. That would have been fine. But let's say you missed both of those, right? you can get in off of first strike, which is a line time frame change in state off the first center for value gap. That's a 15-second change in state off the first center for value gap. So dropping down, once again, we already identified this as a sell model, so now we just get in. So getting rid of this, getting rid of this. Man, the only thing is it's not super obvious. I will admit, it is not obvious at all. Yeah, that is an issue. I was going to say we could take a change in state, but I really don't think that it's obvious enough of a change in state. I mean, depending on your conviction, you could take that. I don't think it's that obvious to take, but I mean, who knows? Someone else might have thought it was good. Yeah, let's just mark it. Let's just mark it up, just in case, you know. But I would not really take this one because it's not that obvious. I thought there'd be a more obvious change in state than that, honestly. So yeah, I'm gonna make a note of that. Alright, so on that retest here, plenty of opportunities to enter on a retest. I'm just being realistic. I probably wouldn't take this, but you know what? We're still going to mark it. More realistic, a lot more realistic, is this 15-second change in state, and this, both of those are so nice, actually. What? Those are actually, we're going to look at both of those. So let's say you wanted extra confirmation off of the Phoenix or off of the off of the 2022 entry. 10-17. Yeah, that's a 369 time. That's kind of cool. Okay. Anyway, 10-17 first strike, 1 minute, aligned with the 15-second. Okay, so yeah, you could have taken, let's say you wanted extra confluence off of this Phoenix. You could take this. So this is flow state off of the Phoenix model. So waiting for a change in state off of a higher time frame level, bang, and then we go lower down to this low. And guys, I think I'm gonna stop. Referring to flow state. When I do the journaling, I usually mark it out: flow state close, flow state retest. It's all just flow state. It doesn't matter if I call it retest or close. So from now on, I'm not gonna do that anymore. I'm just gonna have it marked out as flow state. So flow state 1 minute 15-second with this. Right. And this was at 10:08. Flow state 1 minute 15-second. All right, and then as well, we have another one here. Same thing. I like this change in state. This is one way you could take it. You could have also taken it like this. This one is probably the higher probability one, so I'm going to mark this one out, which is, once again, 1 minute PD array, the 2022 entry. We take this 15-second change in state off of that, bang, and then we go lower. Let's use this move up as our projections, and bang, 4 projections, 7 projections. So let's just say we targeted 4 projections. Well, there we go. That's 4 projections right there. So bang, bang. Could you imagine taking this one and then taking that one? Whew. Be cooking. Alright, there we go. So we sweep that out. So once again, another flow state, this time off of the fair value gap. So change in state off the fair value gap. And it's not 4R because we're entering on a close. And so if you enter on a close, you're not going to get the full 4R. So, all right, 10:15. Flow state, 1 minute, 15 second. All right. Okay, what do we look at now? Yeah, I think I'm gonna record this video. Yeah, I think I'm gonna record a market recap today. That's enough for today, though. I think I'm kind of exhausted. I just want to be done now. So, if you made it this far, you're a real one. Thank you guys so much for watching, and I'll see you guys in the next one. Peace out. And thanks for 2,000 subscribers. Never got to say that yet.